Welcome to the Riskwiser Zone, where we navigate the ever-changing landscape of stocks and finance with a critical eye and a dash of humor. I'm your host, Louis, and today we're shining a spotlight on the optical markets, where Morgan Stanley is seeing a bright future. The investment bank has raised its price targets for Coherent Corp, COHR, and Lumentum Holdings Inc. LI, citing a bullish forecast for the industry. Now, let's take a closer look at these two stocks that are catching the attention of hedge funds and analysts alike. COHR, which engages in the development and manufacturing of engineered materials, optoelectronic components, and lasers, has seen its price target raised to $250 from $200 by Morgan Stanley analyst Meta Marshall. Meanwhile, Light, a provider of optical and photonic products, has had its price target increased to $520 from $420. The driving force behind these optimistic forecasts is the anticipated adoption of new optical technologies as traditional networks reach their limits. According to Morgan Stanley analysts, this could add $23 billion to the total addressable market for optical products, expanding the industry to about $90 billion. That's a growth story that's hard to ignore, especially when you consider that optical markets are set to grow to more than $65 billion by 2028 from about $30 billion in 2025. Now, as tantalizing as these prospects may seem, it's essential to keep things in perspective. While COHR and LIT do show promise, we must acknowledge that other AI stocks might offer greater upside potential with less downside risk. As your trusted guide through the world of finance, I always emphasize the importance of a balanced approach and thorough research before making any investment decisions. So, there you have it. A snapshot of the optical market's growth potential and the stocks that are poised to benefit from this trend. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone, folks. I'm your host, Louis, and we're diving into a story that's got everyone in the energy sector talking. Reports are emerging of a significant disruption to global oil trade, courtesy of tensions in the Middle East. Now, I know what you're thinking, not another geopolitical flare-up, but bear with me here, because this one has some serious implications. According to sources, explosions in Dubai and Abu Dhabi have jolted Middle East financial hubs, and we're seeing a ripple effect on oil prices. The Strait of Hormuz, a critical waterway for the global energy trade, is experiencing significant disruptions. Oil tankers are coming to a stop on both sides of the strait, with some vessels halting journeys out of the Persian Gulf and others building up outside the Gulf of Oman. Now, I want to emphasize that this is a developing story, and we're seeing a lot of uncertainty in the market. Traders are watching for wider disruptions, including the impact of Iranian retaliatory strikes and whether any ports are being disrupted. Several have told us it's too early to say how the market will open next week, citing the uncertainty of the hours ahead. To put this into perspective, the Strait of Hormuz is a vital transit route not just for oil, but also for liquefied natural gas, LNG. Qatar, the world's second-largest LNG exporter, relies heavily on this waterway to reach buyers in Asia and Europe. We're seeing at least 3 gas tankers pause their voyages to avoid the strait, which could have significant implications for global energy markets. As always, we want to caution our listeners that these are complex and fluid situations, and it's essential to stay informed but also to separate fact from speculation. We'll continue to monitor this story and provide updates as more information becomes available. In the meantime, it's worth considering how this might impact your investment portfolio or business operations. Are you diversified enough to weather potential disruptions in the energy sector? These are questions we'll be exploring in more detail in future episodes of the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's show, let's take a look at some of the latest news from around the world that could impact your investments. We have 2 major stories to discuss. Firstly, India is facing a potential crisis due to rising temperatures and a heat wave that has been affecting the country for weeks. This heat wave has led to severe water shortages, power outages, and even deaths. The Indian government has issued warnings and is working to mitigate the effects of the heat wave, but it's essential for investors to keep an eye on this situation as it could impact various sectors such as agriculture, infrastructure, and healthcare. Secondly, Berkshire Hathaway's new CEO, Greg Abel, has written his first annual letter to shareholders. In the letter, Abel pays homage to Warren Buffett, who stepped down as CEO last year, and reassures investors that the company's culture and values will remain unchanged. Abel also mentions that he intends to maintain the company's strong foundation and ensure its continued success in the years to come. It's interesting to note that Abel's leadership style may differ from Buffett's, and investors will be watching closely to see how he navigates the company through various market conditions. Berkshire Hathaway's stock has been performing well, but it's crucial for investors to remain cautious and keep an eye on any potential risks or challenges that the company may face. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, keep your finances in check.